Hello, you're watching Deal Flow, the show that tracks merger and acquisition activity in Africa and beyond. I'm Erika van der Merwe, and thanks for joining us. Commodity chemicals have historically been the dominant target sector for M&A activity globally. The African landscape and its abundance of agricultural land and mineral resources makes for an attractive driver of chemical investment within this continent. Well, on this episode, we'll be looking at the chemical megatrends that are driving procurement and M&A activity in Africa. But first, Tamisha Greater has our deals of the week.
Thanks, Erika. Taking a look at those deals of the week, Apex is going to sell its majority stake in foreign exchange operator Travelex to the owner of the UAE exchange as Dr. Shetty and Abu Dhabi firm Centurion Investments, the private equity group. Although the deal price has not been revealed, sources say the listing of Travelex could give the company a value of up to £1 billion. Now, moving on to other deals of this week, the leading global agribusiness group Archer Daniels Midrand Co. is among the bidders for the German drink and food flavors maker Wild in a deal valued at just over $2 billion. ADM has been pursuing opportunities to expand its global reach since its $2.6 billion bid for a grain handler, GrainCorp, was blocked by the Australian government in November. And finally, looking at the last deal of the week today, we have a UniCredit, that's Italy's biggest bank by assets, is contemplating the sale of more of its private equity investments managed by its German unit Hypovereinsbank, or otherwise known as HVB. The value of the transaction would be around $1.37 billion. Oh, that's the deals of the week. It's back to you, Erika.
The emerging market growth theme, which involves expanding populations, increasing demand for food, and the constraints of water scarcity, imply significant opportunities for the global chemicals industry. Now, merger and acquisitions activity is likely to increase in sub-Saharan Africa as Asian, European and US corporate deal makers look to capitalize on the trends in agri-chemical production, as well as in biochemicals, industrial chemicals and commodity chemicals. For more on this, Lalane Janse van Rensburg, she's Executive Manager at Productivity SA, and Greg Benjamin, he's Manufacturing M&A Leader at Deloitte. Welcome, good to have you here. Greg, I'm going to start with you. If you look at the global drivers, this conversation emanates from a global report that Deloitte does on the chemicals manufacturing sector. So if you look at the global trend, the report was quite positive about some of the global regional activities likely. So amongst other themes, it was clear that there's some fragmentation still in the industry, which creates opportunities for consolidation and deal making.
There certainly does, and I think if you look at one of the key trends that comes out of that report is the globe's focus on emerging markets. And with Africa possessing 6 of the top 10 growing economies in the world, we certainly, as a continent, were a highlight for I suppose, established markets looking for exposure to emerging market returns.
And the nature of that, so growth, population growth, as we've mentioned. So within that, presumably agriculture, so food, water, consumer products become a factor.
Yeah, so there's a few mega trends which I think we as a continent play to. The first one is certainly food security, and there's a number of examples we can mention around transactions that have happened in that space, where Africa, from a land mass perspective, has a significant amount of land that is arable and that hasn't been used. The next one is obviously water. I mean, the comments have been made significantly around what the next war will be fought over in the world. And if you look at Africa as a continent, water is certainly a scarce resource. So getting water into a potable format is certainly a key issue for the continent and for South Africa. I mean, those are only really two of the trends, but there's a number of other trends. I suppose another mega trend would be the drive for growth, because everyone around the world, the global economy, is looking for growth, and growth comes on the back of commodities, because all commodities go into infrastructure growth, etc. So that's, I suppose, which taps into your theme that you're talking about earlier around commodity chemicals.
Yes.
And I suppose the other one that's probably quite important, as I said, this is probably only four of the list, but the other one would be people, because people getting into the space where they're at a position where they're able to change business model, change products, go through I suppose, moving into a space where we're using different chemicals in order to extract what we need to and do what we need to on the continent.
Lalane, I've been seeing you nodding as Gregory speaks, and I think this last point quite relevant, talking about people. And at Productivity SA, you probably indeed look at that coming together of people and technological processes. So what does this mean for, in your view, for the future of the chemicals industry?
Erika, thank you for asking that question. I was nodding because I read this report and I was very impressed with how aligned it is to productivity improvement on a national and on a global level. It's all about people. Productivity to us is a mindset. Now, Productivity SA has a national mandate to improve productivity, but we provide input into the IMD World Competitiveness Yearbook that's obviously launched on a yearly basis. And what we see, the trends, and as he stated, the mega trends that come in, it's about poverty alleviation, regardless of sector. So if you look at the people here, job creation is key. And if you have a productive mindset, you can improve that. It leads to growth. Growth leads to competition, competitiveness. So that is the link to productivity improvement. Productivity SA is also part of the Pan-African Productivity Association, which looks at sub-Saharan Africa. And the challenges that we face, we're not in isolation. They're all over Africa. And if you have that productivity mindset and you take it across industry by means of coaching, teaching people to be more productive and to not waste time, not waste energy, utilizing their time effectively, it's going to lead to growth.
And Greg, I think also what's thematic there is a technological advancement that you're also seeing. These create opportunities in the chemical sector. I think, for instance, of the shift in looking at sort of environmentally friendly technology. So the trends in development in biochemistry, for instance, in general, and also within the agricultural sector, and the implications for deal making on the continent.
Definitely, and tying into that, that's the advanced material space, which goes even further than just the agri-chemical space. It talks about the chemical space in general, so definitely.
We see this theme in other sectors. Is there an opportunity then in the chemical sector in sub-Saharan Africa for a leapfrogging? So Africa perhaps, jumping over some of the older technologies that you've seen in Europe and the US and establishing with newfound technologies and new approaches?
I think there certainly is, and that comes to the concept around growth of whether you go through a build process or a buy process. So the build process is obviously internal generation of new ideas, new business models, new products, new services, to take those to market. And obviously the other side of it, which is the M&A side, is the buy side. And I suppose the challenge as corporates look to grow into the African continent is finding those businesses that already exist in the continent where they can buy and that are meaningful and sustainable, and we've spoken a number of times around executing transactions on the African continent. That certainly comes with its own levels of complexity.
Are there sufficient businesses of scale in the chemical sector in Africa that create the opportunity for the build or for the buy rather, as opposed to the build?
I think there certainly are. In certain markets, look at the South African market, for example, and if we're talking about globals looking at South Africa, we've got some trend-setting chemicals companies in South Africa, with the likes of Sasol, with the likes of AECI, with the likes of Omnia. So there certainly are numerous targets when you look at South Africa. I suppose when you look at a regional basis, when you're going into the African continent and you look at maybe East Africa or West Africa, finding those gems is a challenge on its own, and I suppose executing transactions in those kind of markets and with those kind of companies has another level of challenges.
Yeah. Lalane, perhaps some additional challenges. I'm just reading some of the comments on deal making in the chemical industry in sub-Saharan Africa is transport infrastructure. We know it's still sort of developing rickety in some instances, and this could be an inhibiting factor on development, because perhaps some dangerous chemicals or valuable chemicals need to be moved from point A to B.
I think coaching in an instance like this is key. There's always going to be challenges, and I think the beauty of this is the developmental opportunities that exist. These South African companies that were mentioned previously are successful because of trial and error. So if we take that knowledge and we share that across Africa, we can only win. This is a winning recipe. South Africa works on an incubation concept. Like-minded entities, Productivity SA, CEDA, have incubators that actually assist businesses to replicate success. So I'm seeing growth in Africa by means of incubation, replicating success, and just enjoying that developmental path.
Greg, so will the major contenders, so the buyers, the M&A buyers in sub-Saharan Africa, presumably South Africa is only one of many potential suitors here?
And will they execute transactions?
That too.
I think certainly.
Yeah.
I think certainly. I think if you look at, again, we go to the corporate cash pile in South Africa as well, and the corporate cash pile around the world. There is this corporate cash pile. Cash is seeking yield, and there's bound to be activity in the market. There's a transaction in the market that's still undergoing right now. If you look at AECI trying to get Clarion through Competition Commission, etc. So there certainly are transactions happening in the space. And if we look at it from a global and a local and a continental perspective, there certainly is that trend. I think one key element that I think will probably need to be taken into account, and that's probably not looked at as much in this space, is certainly the regulatory environment. Mm-hmm. Different countries have different regulations, and that ties into the transport question that you asked earlier, because when you're moving chemicals around, and often hazardous chemicals, there's often a large amount of legislation governing how you can move things around and what you can do with it, and also the disposal of waste, etc.
Right. So the safety around that, and perhaps also consistency across borders. If you're moving, say, across 3 markets, making sure you're able to get across the border and move on.
Exactly.
The one point I was also trying to get at, Greg, is that it's not just South Africans competing for assets in sub-Saharan Africa, as we well know. So China, presumably Brazil, India, US and European buyers too. So could this have an impact on valuations?
Well, I think as soon as competition is increased, then it's always got an impact on valuation. So you'll have from a fundamental perspective and you'll have from a competition perspective, both of those items will be driving valuations up. But it's all about bridging the gap, I suppose, between the valuation expectations between sellers and buyers. Mm. And that gap, if we look at that gap of where it has been, say, in the peak years of before 2007 and where we are now, we're probably entering a space where that gap's smaller than it has been in the past. There are still some instances, and there's pockets of valuation differentiation where you're not able to execute transactions and get transactions away, but there certainly is some level of meeting on the minds.
Lalane, in closing, asking you, so you're an ambassador really for South African productivity, manufacturing capability. Do you think that we can stand up to global scrutiny in South Africa and in terms of replicating our model, as you mentioned earlier, on the rest of the continent?
I love that question, because now I can give you a sneak peek into the IMD World Competitiveness Report. South Africa has actually moved up. One space, but we've moved up. And what that means is we are gaining respect. We're gaining more respect when it comes to foreign direct investment. So a company or not a company, a country that has more foreign direct investment makes you more competitive. And the better your reputation, the more competitive you become. I think with regards to water purification, for instance, in South Africa, we're a definite leader. So I think there's a lot that we could offer here. I think we are competitive.
Lalane and Greg, thanks so much for your insights. Lalane, Janse van Rensburg is an executive manager at Productivity SA. Greg Benjamin, manufacturing M&A leader at Deloitte. From me, Erika van der Merwe, goodbye, and thanks for being with us.